Hello, good morning guys. Welcome back to Crypto Cube analysis. So last lesson I discussed about identifying and validating pullbacks and swings, top and bottoms. So today I want to quickly talk about pullbacks and multiple time frame analysis. There are some times when we choose to trade on multiple time frames, where we have up to 3 time frames in which we use one for our directional bias and identify market structure on it. Then we go lower to find our entry triggers. Likewise, we can even go further lower to have the perfect entry. So we have at least 2 to 3 time frames in which we trade with. So when you identify pullbacks on a particular time frame, the pullback may not necessarily be a pullback on another time frame, probably higher, which means a directional bias on one particular time frame will be different from the directional bias on another time frame. I think you know this already. So I'm going to tell you or show you pullbacks on a particular time frame may not necessarily mean there is a pullback on another time frame. Even if there is a pullback on the higher time frame, then the directional bias may still remain intact. Let us know that reversal starts from lower time frames. When there is a reversal on a lower time frame, it can continue to play and then show on the higher time frame. But in some cases, reversals on lower time frames do not end up causing reversals on higher time frame, which is why higher time frame play precedence in technical analysis. And that is why some people tell you use daily time frame or the 4-hourly time frame for your directional bias until that time frame changes direction before you know reversal has happened. So if you are looking at the 4-hourly, as I'm going to use in this particular chart, to get a directional bias, if you go lower to either the 1 hour or the 30 minutes and you see a reversal on that particular time frame, the reversal is only limited to that 1 hour or 30 minutes time frame until it has showed or replicated on the 4-hour time frame. That is when you have a full reversal. And then reversal on 4-hour time frame does not mean there will be reversal on the daily time frame. So let's get into it real quick. I think I use this particular chart to analyze the pullback. So now let's look at what has happened. As you know, this is a 4-hourly time frame. Let's look at this particular point here, where we have these 2 red candles. And what can you notice from there? Let me use the replay tool and go back to this point. So the moment this forms, what do you think you have noticed? Or rather, let me go a bit more back to this point. Okay, so as we can see, we have a bullish structure, right? We have from this particular lows to this side, then to this low, then to this side, now to form this higher low, and then we have these higher highs. So looking at that alone, it's showing us a bullish market structure, right? Then we have this high. This was a slow. We do not know if we are going to have, if we are going to have a top or price is going to continue to the upside. So then the moment I wanted to make it slow, but then it happens to see very fast. So the moment this was the top, right, and then it opened at a point here, we came lower. And what did I say in the last video? I said whenever we make a lower low to the lows of the highest making candle, it means price is possibly turning to the downside, and turning does not mean remain reversal, probably for a pullback. And in this market structure, we will be expecting this, at least this OB, let me mark it out, this OB or this demand zone here for price to retest, to then get momentum to be able to go higher, right? So price made a lower to this, Probably at that time it didn't make a high. So we have the sensation or the notification that price is probably ready to come for the retest of this area. Then price ended up going even to make an higher high to these particular highs. Then we get confused. We have an outside bar. So in this case, this has become the lowest, the highest what's it called? Highest high making candle with also a lower low to this particular lows. Then we shift our bias to this candle in order to get a top. Then let's see what happened in the next candle. We had a bullish candle. I'm assuming this candle has closed below this, but then it still make the highest high, see the highest high candle. Do we then say that we have probably topped and then coming down? That way it will be a sort of indecision because it is the highest high making candle. Then we want to see the next candle to even go lower and close below its lows to be able to ascertain. Probably we can get a deep wick into this and then come back up. So now that this setup has happened, this was the highest high making candle. After this, which also made a low lower to its low. Now the next candle, which could have been a validating candle to show us if we have topped, that is when we close below these lows or we go lower and refuse to go higher, and that is a pivot point. I wanted to talk about pivot points maybe in another video. So this candle now has shown us that this was no top, so we have no pullback at this point. Let me mark it like this. So at this point we have no pullback. It is basically sideways. And why is that? The highest high making candle before this one, we have no close confirming a top. Okay, let's proceed. Then we have this new candle, which happens to be the highest high making candle as of this moment. Okay, now can we say we have a top? Definitely. So are we now ready for the retest of this area or this demand zone? Probably. Now that is what I want to show you. But then if we choose to go lower on this setup, we are likely to see a different thing. But bear in mind, this is still a bullish structure where we have high, low, higher, higher, low. Then our high now, because we have confirmed a top. So we are ready to make the retest, then continue higher. So what we are expecting, our expectation on this particular chart is something like this, right? And then go higher. So we are bullish on this. We want an higher high to this side after a retest of anywhere between here and here. It might not necessarily get there sometimes, then it's rally. Then let's go to the 90 minutes and see what has happened differently. So on this time frame, we can see even another set of structures, which means we have this low to this high, to this low, then to this high. Which one is the highest making? I can't really tell. Seems both. Then this low, then this side, this is a slow, this side, this is a slow. We made a lower low to it, but we didn't close below it, which means price was probably turning, right? Then this is the highs because we didn't close below this low. But if you use just lows and highs and not validating it with close, because truly we made an high here, then we made a lower low, but we didn't close below it to show that we are ready to go for the retest, then we made this side. So let's even go further down to see what happened. As on the 90 minutes, we have this low to this side, to this low, this side, valid. Then let's see if we can validate this particular one here. Okay, this is what we can say for this particular point of confusion at the moment. We have from these lows, this was the highest making candle as at the point price was there. This was its low. We had a move lower than it. We even had a close below it. So let's say that is a pullback to this low. Then we have this side, we have a close and move lower below it before we then move higher than it. So this to this and to this. So plain, we do not have a close below this last low, but then it was still a move lower. Close below it is just to validate that we are ready to go lower. But moving lower with the lows means we have made a lower low. And if you are playing with structure on this particular chart, on this particular time frame, this structure has broken. So you are looking for where to short this market, right? And price came for a retest, came down to make, okay, this is lower before this particular highs. This particular highs and this is a low. So all this action here are sideways until we made this particular highs. Then we have been able to close below these lows, which means we have topped out and they're probably going for the retest. So looking at this, let me end this here. So looking at this, we made an high here, broke the invalidation, came for a retest, then a little pullback, and away, made a new high. So this becomes one, right? Which means when playing with invalidation, this is a point of invalidation, right? Let me mark that real quick. So that becomes a point of invalidation, where if price goes below these very lows, then we are probably turning bearish. So then let's see what happened. Let me just use this play 2. All these moves are still within this swing low to this swing high. So we are currently ranging, right? Until we either move above or we move lower. But on 4 hour, we expect price to move higher, right? Price did move lower. Okay, now we have a break of invalidation. And for us to have a break of invalidation, it means price has turned bearish. Let me go back to this 90 minutes. Now, we have a break of invalidation at this point on the 30 minutes and on the 90 minutes because we made an high here and a low here, which was lower than the low of the highest making candle. Not closing below this highest making candles low means we weren't ready to make the full retest yet. So now that we are from this side, broken this invalidation low, what is expected of us is that at this point we are going to short the market because the price has turned bearish. Then on 4 hour, is the price bearish? No, because this now is a full sideways on the 4 hour time frame. It is no pullback. This was the highest making candle, this was its low, no low below it until this particular point, and then this wasn't the top. Now we made a top before we can come below this low. So this is a top for this swing from this low to this side. This is a top, but on 90 and 30 minutes we have some little structures in it, which means we are now bearish on this time frame up until the 90 minutes. Even the 1 hour should be bearish. Yes, we have this side, it's even clearer on the 1 hour. We have this side making highest high making candle. This was a low. We had a close below the low, then it even made a lower low, lower than every other candle's low. So we have a high, then a low, then a high. So this became the invalidation, and then since we have taken it out, we can only be bearish. Let me exit this to make the full illustration now. So this was the point we got bearish, and what happened? We came for the retest here, then price dropped, then we came from even an higher retest. So what can you see, or what can you note from this retest? This was broken. This was expected to hold as resistance or supply, then to create an higher low, a lower low to these lows, to test all these zones on the higher time frame. But then we didn't quite get that lower low. Rather, I'm looking for this, what's it called, this, okay, but rather we had an ABC type of move. No, sorry. From these lows, we have A, B, C move, which then was the ABC correction for this swing high to this swing low. Then after that, what happened? Now this is a new low to break to continue being bearish. Why this is a high to break to continue to resume our bullish bias. If we break this high on this time frame, that means on 4 hour is bullish resumption, right? So this low now got broken after the ABC move, and then we made a lower low. That means this becomes our new invalidation point, and this is our new low that we have to go below, right? This becomes a new low that we have to go below for bearish continuation. So what will be expectant here? We have a move like this now, high to a low, to a high, to a lower low. Then our expectation will be the price come to retest whatever supply was here and then move lower than these lows. So let me mark that out. The price retests this supply and then go lower, right? But then after a retest of that supply, what happened? We moved lower a bit, then push up again, push back lower a bit, and then we broke this invalidation and this supply. Now let's go back to our 4 hourly. Our expectation was that price come either into this OB or this demand zone, right? Because on 4 hour we are still expecting that bullish move. Now if we take our Fibonacci retracement too from this swing stop, this is a 50% retracement level, this is a 62, I think it's 1.8 level, and this is a 70.5. So after going lower than the 50%, we got all the way to the 70.5%, which all these areas are golden zones where you can feel your longs if you are trading with Fibonacci. So anywhere from the 50% even is where you should expect a reversal to the upside. So we were able to come lower and then continue our bullish move. So what we have on the 4 hour now is a move up and a move down, and then the bullish move we expected has happened. But then some people now, if they choose this as a pullback, they are now playing the same thing that we played on the lower time frames. So lower time frame structures can still present in a little way on higher time frames, but then it may not be exactly clear. This was an invalidation to break to resume as bullish bias on this time frame, despite the fact we were expecting a lower low to be made, a lower low to this from this point. We got a bit of fuel and some bit of reward before it got broken. But we have to put in mind that on higher time frame the market is still bullish, so we do not take blind shots. And when price approached anywhere from the 50% Fibonacci retracement level, you want to start looking for long, right, on the 4 hourly. So anytime you see the price has gone below the 50% retracement of this swing on your lower time frame, any shot you see, you know, is a risky shot. Not that it is a risky shot, but it is you trading against the trend on the higher time frame, because the point at which price was were point where longs should be made, and that was what happened. So whatever pullback we had here, which happened to be sideways on the 4 hour, which happens to be sideways, and we were still expecting, some people will even be expecting from this point like this to go higher immediately, but it didn't happen because we broke structure on lower time frame. So the price decided to reward us by doing the ABC move, then coming lower, which means we have 2 ABC move, and then now before going higher. So now if you look at it on the lower time frame, we had to ABC move. We had an ABC move here. We had an ABC move to retest this supply, right, on lower time frame. This swing, from this swing high to this swing low for breaking this invalidation, we had an ABC retracement, which ABC correction. Then we made a lower low to this, which means bearish continuation on this particular time frame. But then you go back to your 4-hourly time frame, and what do you see? You see the same ABC move. But then normally on this time frame, if you are trading only on the 4-hourly, then maybe you think, okay, price is making a channel. You connect this channel up, you connect this channel up. Then you expect at least this demand area to hold, to break this highs. But then because we are still bearish on the lower time frame, we decided to make a full ABC on the 4-hour. Now remember, we have this swing low to this swing high. So from this swing high now to this point becomes our A, then to this side becomes our B, to this point becomes our C. So we made an A, B, C correction for this swing low to this swing high. The same way we made an A, B, C correction for this swing high to this low on lower time frame. Then when that C was done, now we can all see that from this C now, we started making, from this C, we started making a sort, let me use this rather, a sort of little structures, and now we are bullish. And this structure has broken this side. So we have a move up, move down, move up. Then we expect a retracement again to find demand or support anywhere and then continue higher. Then if you look at this mini structure again on this particular time frame, we have 1, 2, 3, 4, 5. That means on this particular time frame, you expect a correction of this entire move from this swing point. Correction of this entire move from this swing point to this swing. This is an OB which has broken not just this top, but then the full structure to continue being bullish. Then we have our point of demand around this area now, which is from the 70.5% level. But then there is one thing, on this particular time frame, we have no top, right? This is our highest making candle as of this particular time, until the next candle forms, and if it's able to go lower than this low before we see the before we get the notification or the assumptions or the assumption of having a top. But on lower time frame, the story may be different. And on lower time frame, what can you see? If we are to go from this left hand side to this top, we have this side making candle. It's also the lowest making candle. Then we have this side making candle. I'm not sure if we have a double bottom here. It seems like a double bottom. Then we have this side making candle. This price came lower to it, which means price seems ready to turn. But then it ended up being bullish. Ending up being bullish doesn't mean anything at this particular point, because it made the highest side, then we have a lower high to it, and we have a lower low to its low. So price seems ready to turn. But like I said, if we have a close below its low, if we have a close below its low, that will show us that price is ready to go down for the retest. Moving lower means price is beginning to turn. But if we have a close below it, then price has stopped. But then we didn't have a close below it, which shows that the bulls probably were still strong. Then now we have this higher side making candle. We have a lower high to it, but we didn't have a lower low to it, neither a close. But now it seems to be getting a move lower than its lows. And then if we happen to close below it, that means we probably have a top, and then probably a move lower. And then this is also an OB on this particular 30 minutes time frame, which is quite different to the 4 hourly. If we use the 90 minutes, this now on the 90 minutes is the RSI making candle, then we want to see price go below this low, and not just go below this low, try to close below it to give us a full confirmation of price readiness to go for the retest. As at this particular moment, we do not have a top yet on this particular 4-hourly time frame. So we'll be expecting. So that is how you can check pullbacks with multiple time frames, because you have a valid pullback on a particular time frame does not mean that it is a valid pullback on another time frame. So this becomes a full swing rather than this now being the low to the high on this particular time frame. Assuming this was a valid pullback on this particular time frame, probably we wouldn't have made the higher high to this side. We could have gone full bearish. Now these zones here are no longer valid. They are still valid because they can create sell side liquidity. There will be buy orders to push the price up to fill sell orders. Better they are going to hold for a big rally. That is not the guarantee anymore. Here now becomes our invalidation point. Once price goes below and close below these lows, then we have turned bearish. So that is it about pullbacks on multiple time frames. I think the best way to actually get these points of pullbacks out will be to use, what's it called, pivots or pivot points as explanations. If you understand what pivot point means, then you will easily understand what we are trying to say. And pivot points means you have like a candle now, then you have another candle making an higher high, and then you have another candle not higher than it but lower than its lows. You see, this is the same way I have shown you about forming tops. Like you have here, this side was higher, this side was lower to this, and this it has a lower low to its lows. That means we have a pivot high or pivot high at this point, and that has shown us that we have a top. It could be a minor, intermediate, or a major top. We just have to find out which it is. So when we are at the top, you can see from this confirmation, price move lower, and then at this point again we are at the bottom, price move lower. At this point, which could have been a top, trading wasn't confirmed by this next candle, but we had a lower low to its size. Then we were able to go lower. Later on, we made a move lower. Then here we had a good bottom, but then this bottom on this particular move was just a correction for price to go lower. And that is why sometimes you spot tops and bottoms at some points or price levels. It doesn't mean it will hold. You have to look at the bigger play and the bigger structural play. And that was why we made a move lower, and then now we have another high to resume our bullish bias on this particular time frame. So that is it about multiple time frames and pullbacks. Alright guys, see you in another video. Thank you.